Usually when we talk about enterprise cybersecurity, there's this expectation of a perimeter.
Right, like a classic castle wall.
Exactly. You
Yeah.
build the stone wall high enough, you dig the moat deep enough, and, you just keep the bad guys out.
It's that classic fortress mentality. And honestly, a huge chunk of corporate IT budgets are still spent under this illusion that if a company just buys enough firewalls and like endpoint detection tools, their data is totally safe.
But then you look at the reality of modern ransomware
Oh, yeah.
and the sheer explosion of artificial intelligence, and suddenly that thick, stern wall looks a lot more like a chain link fence.
Yeah, it really does.
We're looking at a threat landscape that isn't just breaching the perimeter anymore. It's already inside the house. The castle walls are failing, which is exactly why today we are doing a really thorough exploration into a massive stack of financial transcripts, market reports, and product briefs on a company that's trying to build the bunker beneath that house. Rubrik, yeah, they trade on the New York Stock Exchange under the ticker RBRK. And our mission with this in-depth analysis is to synthesize all of these, really dense sources to build a clear three-part profile for you.
Mm-hmm.
We are going to uncover the core investment thesis, the potential risks, and a clear valuation reference based on the absolute latest data.
And I'll say, while reading through enterprise software financials can sometimes feel like translating an ancient language.
Tell me about it.
Right. But the narrative we're unpacking today is entirely grounded in high-stakes corporate survival. We are looking at the frontier of autonomous AI, massive corporate turnarounds, and literally billions of dollars in shifting IT budgets.
Okay, let's unpack this. Because before we even touch the financials or the stock price, we have to understand what Rubrik actually sells.
Right.
And why it's violently disrupting the legacy data protection market. The whole industry is shifting from this idea of reactive static backups to something called proactive cyber resilience.
Which is a huge shift.
Yeah. It is. And it's driven by a rather terrifying philosophy called the assume breach mentality.
Yeah, assume breach fundamentally changes the architecture of a company. You basically stop pretending you can keep every sophisticated attacker out.
Because you can't.
Exactly, you can't. So instead, you operate under the assumption that they are already lurking somewhere in your network. And when you adopt that mindset, your priority shifts from just building a better wall to ensuring that when the worst happens, your business can actually, survive the hit and recover its operations.
On a recent earnings call, Rubrik's CEO used an analogy that perfectly captures this architectural shift. He said, traditional security is like locking the doors and windows of your house.
Right.
But when the inevitable doomsday ransomware hits, when the Category 5 tornado comes, those locks don't matter because the house itself is getting leveled. You need a secure bunker underneath the house to survive. And Rubrik is positioning itself as that bunker.
What's fascinating here is how they've constructed that bunker. That's what sets them apart mechanically. It's called the Rubrik Security Cloud, and it acts as an immutable fabric.
Immutable being the key word there.
Immutable is the operational word, yeah. It means once the data is written into their system, it physically cannot be changed, encrypted, or deleted by ransomware.
Which is huge.
It is, because modern ransomware is incredibly smart. It doesn't just lock up your active files anymore. It actively hunts for your backups to destroy those too.
Right, so you have no leverage.
Exactly. But Rubrik's architecture prevents that at a structural level. But it's not just covering data, it's covering identity. And this is a massive differentiator in the current market.
Because what good is a perfectly clean backup of your data if the attackers have locked you out of the system entirely?
Right.
Like if your IT team can't even log in, they can't initiate the restore.
Yeah, if your Active Directory goes down, your company is totally paralyzed. Rubrik saw this vulnerability and they launched Identity Resilience.
Which is brilliant.
It really is. It recovers Active Directory as well as cloud identity managers like Entra ID and Okta. For context, you can think of Entra ID and Okta as the digital bouncers for a company's cloud apps.
Right.
They check the VIP list to see who gets into Salesforce or Microsoft 365. If the bouncer gets knocked out, nobody gets in. Rubrik ensures the bouncer gets back on their feet immediately. And the market response has been explosive. They gained over 900 customers for this identity solution in just a few quarters.
And behind all of this is their proprietary engine, which they call ProMote. From what I read in the architecture briefs, this engine is constantly working in the background to pre-calculate clean recovery points.
Yes.
So, when the alarm bells ring, you aren't scrambling to figure out which backup is infected or spending days scanning for malware. The system already knows exactly where the safe, uncorrupted data is.
Which turns a recovery process that used to take weeks or months into a process that literally takes hours. They've essentially built a mission control platform for the enterprise.
Mission control, yeah.
They aren't just a backup vendor anymore. They are the ultimate safety net for a company's digital existence.
So they have this incredibly solid core business protecting today's data and identity. But looking at the broader market trends, protecting what already exists isn't enough to justify a massive valuation.
No, it's not.
The real growth engine moving forward is the explosion of artificial intelligence. Gartner forecasts global IT spending to hit $6.15 trillion.
Trillion with a T.
With a T. And a huge chunk of that is aimed at AI infrastructure. Rubrik is going after a very specific, very volatile slice of that pie.
They are targeting the sharpest double-edged sword in tech right now, which is agentic AI.
Okay, what is that?
Well, we aren't just talking about simple chatbots that answer questions or draft emails anymore. We're talking about autonomous AI agents that can execute complex business processes, access proprietary databases, and make independent decisions without human oversight.
The sources outline this dynamic perfectly. These AI agents promise, 100 times the productivity.
Yeah.
But they also pose 100 times the risk because they operate at machine speed.
Exactly.
Let's put you, the listener, in the shoes of a chief information security officer for a moment. Imagine you've deployed an AI agent to help your sales team manage customer data. If that agent suffers from a hallucination, or if it gets compromised through a prompt injection attack.
Which happens all the time.
Right. It can do 10 times the damage in 1/10 of the time. It can start autonomously deleting Salesforce opportunities or scrambling financial records before a human even realizes what's happening.
It is the literal definition of agentic chaos. To solve this, Rubrik launched the Rubrik Agent Cloud, or RAC, and it's powered by their semantic AI governance engine known as SAGE.
Which includes a feature called Agent Rewind.
Yes, I love this feature.
It's so cool. It basically acts as a TISROL plus Z for AI mistakes. If an AI agent accidentally mass deletes those Salesforce opportunities, Rubrik allows you to safely undo those destructive actions using their immutable backups. But I actually have to push back here.
Okay, go ahead.
Because I was reading this and wondering, aren't the big cloud providers, the hyperscalers like Microsoft and AWS, aren't they already building guardrails for their own AI? Why does a massive enterprise need to buy a third-party solution like Rubrik for this?
It's a great question. Think of it this way. The hyperscalers are building the highways. They are providing the massive computing infrastructure and the foundational AI models. But Rubrik is providing the intelligent autonomous driving system. They are the brakes and the steering wheel. Hyperscalers naturally prioritize performance and platform adoption, but Rubrik's sole priority is resilience and governance.
And an enterprise isn't just using one single AI platform, right? They are heavily diversified.
Exactly. A Fortune 500 company might have agents running on OpenAI, Microsoft Copilot, and Amazon Bedrock simultaneously. If you rely on the hyperscalers' built-in tools, you end up with fragmented security policies.
Which is a nightmare to manage.
A total nightmare. Rubrik Agent Cloud sits neutrally across all of them. It solves the control gap that is currently terrifying CISOs and preventing massive enterprises from fully deploying AI. They provide a single pane of glass to monitor, govern, and remediate agent actions, regardless of who built the underlying AI model.
Here's where it gets really interesting. So they have this brilliant AI safety net, but great tech doesn't always equal a great business.
That's the truth.
Right. If enterprises actually value this agent rewind and the immutable bunker as much as Rubrik claims, we should see it pulling its weight in the subscription numbers. And looking at their FY26 Q4 results, the translation to the balance sheet is just staggering.
It really is.
Subscription annual recurring revenue, or ARR, hit $1.46 billion. That's up 34% year over year. Total revenue reached $1.32 billion, up 48%. And their gross margins expanded to over 80%.
The transition to a subscription model is a massive part of that success. It's the evolution from selling a one-time perpetual software license, where you basically just hope the customer buys your next upgrade in 3 years, to a sticky recurring revenue stream.
It's like moving from selling a one-time CD-ROM to a streaming subscription.
Exactly. And once the initial heavy cost of acquiring that customer is paid off, that recurring revenue starts generating significant leverage. And that leverage is showing up vividly in their cash flow.
The free cash flow numbers are arguably the most impressive part of the report. They made a massive leap, jumping from $21.6 million in FY25 to $237.8 million in FY26.
Wow.
Yeah, that is a transformative increase in liquidity for a company of this size. And the financial analysts in the sources keep referring to Rubrik as a Rule of 40 leader.
Right, the Rule of 40.
Let's break that math down because it's a vital benchmark used to measure the health of software as a service companies. Basically, you add the revenue growth rate to the free cash flow margin. If that combined number is over 40, you are considered to be in an elite class of efficient growth.
So for Rubrik, you take their 46% revenue growth, you add their 18.5% free cash flow margin, and you get an incredible 64.5%.
That is absurdly high.
It is. That kind of financial efficiency in this macroeconomic environment is very rare, especially at a billion-dollar revenue scale. And it doesn't happen by accident. It happens because they are actively displacing entrenched competitors. Their win rates against legacy vendors are currently over 90%.
Over 90% is almost unheard of in enterprise software. There was this highly specific example in the earnings call of a Fortune 500 global hospitality company that illustrates exactly how they are winning these deals.
Oh, I read about that one.
Yeah, this hospitality giant had a sprawling, totally decentralized IT mess. They had a deeply entrenched legacy provider for their on-premises data and a totally separate cloud-native backup solution. They were paying massive licensing fees for both, managing two disparate systems, and still suffering from unacceptably slow recovery times.
The worst of both worlds.
Exactly. So they completely ripped out both systems and consolidated everything onto Rubrik. They saved millions of dollars just by eliminating the old native backup costs, not to mention drastically reducing their operational overhead.
What's crucial for the long-term health of Rubrik's business is what happens after that initial sale. Over 45% of their subscription net retention rate, or NRR, in Q4 came from cross-selling.
Okay, and NRR essentially measures how much existing customers are spending compared to last year, right?
Right. A number over 100% means your current customers are buying more from you, even accounting for any cancellations.
So if we go back to the bunker analogy, once a customer buys into the base level of the bunker to protect their data, they look around and realize the other vulnerabilities.
Yeah, exactly.
You say, we should probably protect our identity systems too. So they buy another room in the bunker. Then they deploy AI agents, get nervous about the risk, and add the Rubrik Agent Cloud guardrails. They just keep buying more rooms, which proves the incredible stickiness of the platform.
The switching costs become astronomically high. Once Rubrik is fully integrated into a company's data, identity, and AI governance, ripping them out becomes a logistical nightmare. Nobody wants to do it.
So the top-line growth and the free cash flow look incredible. But as analysts, we have to look for the tripwires.
Always.
No investment is perfect, and we need to do a reality check on the potential risks threatening this company. And the most glaring risk, the one that conservative investors will spot on page 1 of the financials, is unprofitability on a GAAP basis.
Yes.
Despite generating nearly $240 million in free cash flow, Rubrik reported a GAAP net loss of $345.4 million for FY26. They also have negative shareholder equity. Analysts don't expect them to hit GAAP break-even until 2029. I have to admit, reading this initially felt like a massive contradiction.
It does look strange at first glance.
Right, like, wait, if they are generating nearly $240 million in actual cash in the bank, how are they simultaneously losing $345 million on paper?
This raises an important question, and it's a very common point of confusion. It highlights a critical quirk in how high-growth tech companies are accounted for. The massive gap between positive cash flow and heavy GAAP losses is almost entirely driven by stock-based compensation.
Ah, stock options.
Exactly. To attract top-tier engineering and executive talent away from the hyperscalers, because you're competing with Google and Amazon companies like Rubrik, pay them heavily in stock options.
So under generally accepted accounting principles, or GAAP, that stock compensation is recorded as a massive operating expense.
Correct.
Which brutally drags down the net income on the income statement.
But it's a non-cash expense. No actual money is leaving Rubrik's bank account to pay for those stock grants today. So the cash flow remains highly positive, but the accounting loss reflects the dilution of the shares.
I see.
While this is standard practice in Silicon Valley, in fact, many argue that if a SaaS company is GAAP profitable too early, they actually aren't reinvesting enough into capturing market share. A lack of GAAP profitability and negative shareholder equity remains a genuine material risk.
Because of market sentiment.
Exactly. If the broader market sentiment turns aggressively against unprofitable tech stocks, Rubrik's share price will suffer regardless of its strong cash flow.
And beyond the financials, there is also the reality of fierce competition and platform fatigue.
Oh, absolutely.
Chief information security officers are so tired of buying 50 different security tools. They want consolidation. Rubrik is fighting against cybersecurity giants like CrowdStrike and Palo Alto Networks. These are massive companies with deep pockets and established footprints in the enterprise.
Right.
If they decide to expand their own platforms to compete directly with Rubrik's data and identity recovery, it could become a bruising, margin-crushing battle for IT budgets.
We also can't ignore the execution risk, particularly around their new AI products. As we discussed earlier, AI agents are inherently non-deterministic.
Meaning they don't always do the same thing twice.
Exactly. If Rubrik's Agent Rewind fails during a high-stakes corporate disaster if that Cyril plus Z function doesn't work perfectly when an enterprise is bleeding proprietary data, it could instantly destroy Rubrik's reputation as the ultimate trust layer.
Not to mention the broader macro and regulatory risks. You've got geopolitical volatility, tightening IT budgets in a high-interest rate environment, or even new, really complex data sovereignty laws in Europe or Asia could all throw a wrench into their global expansion plans.
We've weighed the stellar growth against these very real tripwires. So let's look at the valuation reference. How is Wall Street pricing RBRK right now, and is there genuine value here for the investor?
Let's get into the numbers.
Looking at the latest data, the current share price is hovering around $49.28, giving them a market cap of roughly $9.9 billion. Now, because they don't have GAAP earnings, traditional metrics like a price-to-earnings or PE ratio are essentially useless here.
Because the E in PE is negative.
Exactly. So Wall Street has to look at the top line instead of the bottom line. This is exactly why analysts evaluate high-growth SaaS companies using the enterprise value to revenue multiple, or EV to sales.
Okay.
It compares the total value of the company market cap plus debt minus cash to its overall sales. It's the ultimate scorecard for top-line growth. Rubrik currently sits around a 7.1x to 8.7x EV to sales multiple.
I was looking at that multiple, and to me, compared to their peers in the data and security space, it feels like a significant discount.
It is.
Like, Snowflake trades at about 12.5x, and CrowdStrike commands a massive premium of around 19x to 20x. So what does this all mean? Given Rubrik's elite 64.5% Rule of 40 metrics, are investors just heavily spooked by the GAAP losses in the competitive landscape, or am I missing something? Is this a genuine mispricing by the market?
The analyst consensus strongly suggests it's a mispricing. Out of 27 analysts covering the stock, 25 rate it a buy or strong buy.
Wow, 25 out of 27.
Yeah. The median 12-month price target is $86.71, which represents a potential upside of about 76%. And for historical context, if Rubrik simply returned to its own 3-year average EV to sales multiple of 11.8x, the stock would be valued at approximately $81.84.
So there's a fascinating divergence here. You have institutional analysts who are incredibly bullish on the underlying fundamentals, yet the share price trades at a notable discount to its peers.
Ultimately, for investors who are willing to stomach the volatility of a company that is currently unprofitable on paper, the discounted multiples, combined with that massive free cash flow generation and high win rates, make it a highly compelling valuation.
Yeah.
The broader market seems to be slightly underpricing their successful transition from being a simple, specialized backup tool to becoming an indispensable, comprehensive cybersecurity platform.
It's the evolution from a nice-to-have insurance policy to an absolute necessity for survival. And as we wrap up this in-depth analysis, there is one final, really provocative thought we want to leave you with, something for you to mull over.
Right.
It wasn't heavily featured in the financial metrics today, but it is quietly brewing in the background of the Gartner reports.
While we've talked extensively about ransomware and rogue AI agents, there is a looming existential threat on the horizon, and that's quantum computing.
Which sounds like sci-fi, but it's not.
It's not. The projections suggest that by 2030, quantum computers could be powerful enough to easily breach current encryption standards.
Which has led to a terrifying new strategy by nation-state threat actors called harvest now, decrypt later.
That phrase alone is chilling.
Right. They are actively stealing highly sensitive encrypted data today, knowing perfectly well they can't actually read it yet.
Yeah.
They're just storing it in a massive digital vault until they have a quantum computer capable of unlocking it.
In that near-future scenario, Rubrik's intense focus on cryptographic agility, Zero trust architecture and completely immutable data might transition from being just a competitive enterprise feature to a matter of absolute global security.
It's a huge shift.
If your foundational data isn't perfectly secured and recoverable at a structural level today, tomorrow's technology will strip it bare.
It definitely makes you look at the necessity of that digital bunker in a whole new light. Thank you for joining us on this thorough exploration of Rubrik's financial and technological landscape. Continue to watch for our next release.